My name is Josh Antis. I'm with California Coastal Credit Union. Welcome to our webinar today on budgeting for 2022. Before we get started, just wanted to mention a few things. Everyone will be placed on mute for today's presentation. However, we're pretty, average size group, maybe smaller group today. So if you do have any questions, you can include them in the chat box, the question and answer box, or if you would like to ask any questions live by voice, you can raise your hand and I'll make sure to unmute you and you can ask any questions that you might have. And then just a couple things I want to mention. At the end of today's presentation, you will receive a notice that we have an evaluation survey for you to fill out. Everyone that takes the time to fill that survey out, either at the end of the presentation or you'll receive an email in the next day or two that'll also give you the opportunity to fill out the survey. Everyone who fills it out will be entered into a drawing for a $25 Amazon gift card, and we're giving away 2 of them. So please take the time to fill that out, give us your feedback. We appreciate it, and we use that as we go to continue to improve our webinars. And also just want to mention that we have a lot of great financial resources, financial wellness resources that is available to you as employees of the City of San Diego. If you haven't already checked it out, be sure to go to the landing page that we have set up for you. I will put the link in the chat. It has the recordings of all of our webinars we've done. It has Enrich, which is our financial wellness portal, which has videos, articles, tools, courses, all kinds of resources available for you that are available for any number of topics, whether it's budgeting or credit scores or retirement, investing, you name it, it's on there. There's thousands of resources there. It's all completely free. So please feel free to check that out. And right now we still have a promotion going where if you're not a member of CalCoast yet, if you do become a member, it's completely free. And we actually pay you $100 to become a member. So if you like a little extra spending cash this holiday season, let us know. We can set up an account. Just savings and checking is all that's required with a $25 deposit. And if you are a member, we also have a referral program where you get $50 for you and $50 for anyone you refer. So keep that in mind in case you need that extra spending cash for the holiday season here. Today's recording will be posted on the YouTube channel we have set up for you in the coming days. So if you miss anything or if you want to go back and check out anything Taralyn, our presenter, talks about, you can do so. We'll have it posted for you. So with that, I do want to go ahead and introduce Taralyn Rose. She is the manager of our financial fitness coaching department. Any of you that have joined us for webinars in the past probably recognize her. She is an amazing presenter and just a wealth of knowledge. She's been doing this a long time. So she's going to take us through budgeting for 2022. Taralyn, take it away.
Thank you so much. Yes, I am very, very excited about going over everything with you guys. I'm going to go ahead and share my screen with you. And we are talking today budgeting for 2022. And like Josh said, anybody who has done any of my webinars knows that I hate the word budget. I like setting a plan. And I feel like this end of the year is a really good time to reflect on what we've done, what we spend, where our money has gone. And also look ahead for the new year and think about what we want our money to do. What does financial fitness look like to you? What is your plan for 2022? Where do you see yourself at the end of the year, at the end of 5 years, at the end of 20 years? You can see the notes screen. Let me go ahead and pull this over. Let me go ahead and pull this. I'm kind of new to Zoom, so I'm still kind of getting the hang of this. So let me go ahead and do this here. Does that work? Will you just see the slide on there, budgeting for 2022? Hopefully that's working for you.
That's good.
Thank you. So today we're going to talk about looking at that plan for 2022, and we're going to, put me in control, use my earned M to help me reach my goals. I like that plan. It's powerful. It's deliberate. I'm in control of where my money is going, and I really like that feeling. I like being in control of the money that I have and reaching my financial goals. So we're going to go over this plan, reviewing our expenses, setting goals so we are actually working towards something, creating your plan based on this new information, setting up accounts that help you achieve those goals, and sticking to the plan, which for me is probably the hardest part of what we do. So we're going to talk today, starting off with just reviewing what we did last year, reviewing where we are right now, and we're going to take a look at your income first. I mean, how long has it been since you've actually looked at your pay stub? Do you know what all those abbreviations mean, all the money that's coming out of your account? I want you to look at your pay stub, look at your gross income, all the money that you actually earn that you don't get to keep because they take out taxes, they take out your insurances, take out all kind of stuff of that. So I want you to look down and notate, what are you paying towards 401k? What are you paying total in taxes? What are you paying for your insurance? What is it covering? If you're paying for life insurance, how much do you get? So really do a deep dive into that pay stub so that you know exactly how much income you have and how much income you actually have to spend. It's also a good time to review what you're paying in taxes. If you got back more than $1,000 in taxes last year and haven't made any adjustments in your income withholding, I think it's a good time to talk to your tax advisor, because if you're having more than $1,000 returned to you, that's like $84 extra a month in your cash flow that you can use to help you achieve your financial goals now, instead of waiting for the end of the year, you file your taxes and get all your money back while they hold it at 0%. If you're paying on credit cards that are 25.99%, it doesn't make sense for the federal government to hold your money on a monthly pay period. So make sure you're looking at your taxes. It's also a good time to go look at the value of any assets that you have. So home would be going and looking at like Zillow or Trillia. I don't want you to pay for an appraisal, but I want you to get a general idea. I mean, it's been a crazy year for costs of those homes. So go and take a look and see. We bought a condo 3 years ago for $225. The one next to us sold for $350 this year. It's crazy. Don't think it's going to last, but I do want you to know where it's at right now. Also look at your car. Kelley Blue Book, just kbb.com, find out what that current retail value of your car is. And any investments that you have, I want you to look at your statements. I want you to find out what that rate of return is on your investments. All of this information is going to help us make some financial decisions based on real numbers, an educated financial decision with all of the information at our fingertips. So go and look at that last statement. How much are your investments earning? And that's important, because if I take a look at my 401k statement and I made 3% last quarter and I'm paying 25.99% on a credit card, it doesn't make sense to make extra contributions to my 401k right now when I can pay off that credit card and get an instant return of 25.99%. So we're looking at how can we make that money work harder for you, and understanding what you're earning and what you're paying on everything is going to help you make that decision about what to do with any extra money that you have. So this goes to those creditor statements. I want you to go in and actually get every single statement for every single credit debt that you have, and write down the minimum payment, the interest rate, the balance, and the limit. Again, all of this information is going to help us determine how we're going to use our extra money. You have to usually look on the third page of your statement to find the interest rate. They bury it. They don't want you to know how much you're paying in interest. So get your actual physical statement. Go look at all this information, because it will go into how to attack that debt, how to improve my credit score, how to get that debt paid off eventually. So we're going to gather all this data. The next thing that I think is important to look at the beginning of the year, and I recommend you do this in January of every single year, look at your insurances. Look at your life insurance, your car insurance, your home insurance, your rental insurance. Look at all of this and really start looking at the details. What is the coverage? What are your terms? Who are the beneficiaries? For life insurance, are you doing a term insurance, which is I'm paying a set amount for a set amount of time and then it's done? So if something happens to me after that term is done, I don't get any life insurance from beneficiaries. Whole life is typically you're making some type of investment. It's a higher contribution. I also want you looking at how much that contribution in a whole life insurance is earning, because if, again, it's only earning 3% and I can invest in something that's earning an average rate of return of 8%, where do I want that extra money to go? Maybe a whole term isn't the right option for you. Talk to a financial advisor. I want you looking at the value and making sure that you have enough. If anything has changed, if you have someone who's dependent on your income to survive, you have a child who isn't through college yet, or you have a spouse who doesn't have a large income, I want to make sure that you know what your monthly expenses are, and that if anything happens to you, your child can get to a place where they're financially independent. Your partner can get to a place where they can, cover the mortgage, they can keep a roof over their head and food on their table. If anybody is financially dependent on your income to survive, you should have life insurance. You should know how much you need And that's looking at those monthly expenses and the amount of time it would take for that person to become financially independent. My daughters are 30 years old. They're doing okay on their own. I don't need to have life insurance any longer. Also, update your beneficiaries. I cannot tell you how many times we get people come in with a life insurance policy that haven't updated it. Someone passes away and it goes to an ex-spouse that they absolutely hate instead of going to a new spouse or their children because they haven't updated the beneficiaries. Look at your life insurance policy. Look at your account. If you have a bank account, credit union account, do you have a beneficiary established? Any investments that you have, look at your beneficiaries as well. Looking at the car insurance, it's a great time at the beginning of the year to research. Call 2 or 3 different companies and make sure that you are getting the absolute best deal that you can with a good reputable company, and make sure that the coverage you have is enough to cover if anything happens to you. I've been in car accidents. It wasn't my fault, but the person had $15,000 as coverage and it was not enough to cover all of my medical expenses. There were a couple of other things I had to do to get that money back, but make sure you have enough coverage to protect you and whoever else might get injured, any property that might get injured. Something that you might not know is if you're a member of California Coast Credit Union, we just partnered with Wawanesa last year. So you can actually get a 5% discount on your policy with Wawanesa. They are very reputable. They cover safe drivers. If you have any tickets or accidents, they typically don't take you. But because they only cover safe drivers, their policies are really low and you get that 5% discount on top of it. So give them a call, let them know you're a Cal Coast member. You can see what that cost might be. Home insurance is also, now that you've looked at the value of the home, you know what that home is worth. It's a good time to make sure that your home insurance is going to cover the replacement if anything happens to it. Look at the coverage, and same thing, research. Call 2 or 3 companies and make sure that you're getting the best policy that you can. Maybe you need more insurance, maybe you need less insurance, but really do a research so you can update and make sure that we're not paying more than we have to or less than we need to. It's a really good time to refresh and look at everything. So let's talk about what debt is costing you. I feel this is a really good thing to do, to really go in. I've been doing this a lot lately with a lot of my members in these most recent appointments that I've done, is let's pull up those statements that you pulled out for that last exercise that we had you do. We know what the interest rate is. So I want you to look at that last payment on all of your statements, write down the payment amount, and then I want you to write down how much you paid in interest last month and look at how much of that payment actually went to principal. So I have a member who's paying $300. Only $84 of her payment was going towards paying that principal balance down. The rest of it was the interest. So if you go to every single payment and write it down and write down every single amount of interest that you're paying, it's a kind of kick in the stomach sometimes to really look at how much our debt is costing us. If I had all of that interest in my pocket, what could I do with it? Instead of paying towards these creditors because I borrowed money when I didn't have it, I want to pay those debts off so I can keep that money in my pocket. How much is that debt really costing you? And how many hours do you have to work to pay off the interest that you're paying on those debts? It's kind of a scary exercise, but it's a really interesting exercise. And I feel it's really important to do at the end of the year so you can really get a handle of where your money is going. Okay. So again, we're going to talk about, this is all about budgeting for the new year. It's a really good time to look at where your money is going on a monthly basis. So we're going to look at both fixed and variable expenses for monthly amounts, things that we do every single month. Again, if you've attended any of my budgeting ones, it's kind of the same thing because this doesn't change. We have to know where our money is going on a monthly basis to really go in. So we're going to go here and talk about, okay, let me go back. Sorry about that. Let's talk about fixed expenses. What are some, in the chat, if you can write down, what are some fixed expenses, has a due date, it's the same amount every single month, doesn't change. What are some, sorry, I keep doing that. What are some expenses that you guys pay on a monthly basis, doesn't change, fixed due date, think small and think big. So what are some small streaming services that you might pay that has a due date, has a fixed amount? Throw it in the chat and let me know what you pay on a monthly basis, and some big ones too. Any fixed expenses you pay on a monthly basis, like, think about utilities. What do you guys have in the chat? What do you have that you pay? Think about a streaming service, maybe TV that you pay for. Anything? Cox Cable, yes, that's going up. We had a plan that was only $29.99, and then when the special ended, it went to $58.99. That went a lot up, and that's to get fairly decent service because I'm working from home sometimes, so I had to have good cable. So yeah, Cox Cable, internet, all of those expenses add up. If you have streaming services like Netflix, Disney, if you have any music streaming services, Netflix, AT&T, yes, thank you, Netflix. Now, a lot of times people are like, oh, like there's one I pay $1 for extra storage, cloud storage. And I'm like, oh, it's only $1. I'm not going to worry about it. But I've got $1 for that. I've got $14.99 for AT&T. I've got $5.99 for my music streaming. And you keep adding all those up. I had a member who was paying over $100 for all the different streaming services. Like, oh, it's only $7.99. It's only $4.99. It's only $10.99. And then you ended up paying over $100 a month for that. So we're going to write all those down. Trash fee, water bill. Thank you so much for putting those in there, guys. Yes. The next thing we're going to look at are those variable expenses. So these are things that we also spend on a weekly, monthly basis. We have to do some of these things to survive, but we can spend more or less depending on our needs or how we, what our habits are. So there are some variable expenses that you pay that you have to do to survive every single week, every single month. I can spend more, I can spend less. Groceries. Yes, that's a huge one. So I can either eat all organic and all the supplements and spend, $1,000 a month, or I can eat top ramen and spaghetti sauce and eat a lot less. Gas is another really good one. I can drive my Humvee every day back and forth to Temecula, or I can ride my bicycle and reduce that or share rides or do something like that. So I do have to pay gas. We have to pay food. Oh, Starbucks. That's a good one. Coffee that's a variable expense. People do that every day, every week. We spend that money on there. I can spend more, I can spend less, determining on my habits. So yeah, those are all really great ideas. Now we have going into the next category. Let's talk about the next slide is our periodic expenses. So these are the ones that we do occasionally, right? So these are ones that I don't do necessarily every single month, but I do have these expenses in my life. So we're going to talk about some fixed periodic expenses. These are things that you pay maybe once a year, maybe twice a year. It's a set amount. It has a due date, a set month where you have to pay it. So think about your expenses. If you have a car, here's an example, property. Yes. Oh, guys, you guys got that going. Property tax, auto registration, insurance, I pay twice a year, car registration. Yes. Now, these are things that I absolutely do every single year. So I'm going to plug this in, and for my DMV is like $240. I do that every single year in October. So if I set aside $20 a month or $10 a paycheck into an account, I'm going to have the money I need for that next year. Professional memberships, yes, that's a great one that gets missed. I have to do my office every single year. I use that for everything. So I have to pay office every year. So that's another one. I also pay any gym memberships. I have a volleyball membership that I do every single year so I can go to the AVP tournaments they have out there. So those are kind of things that we're looking at. So I'm going to write all those down. Then we're going to talk about variable. So variable, let's talk about variable. Someone actually mentioned one that I think is a variable one, gifts. These are ones that I typically don't do every single month. So what I'm going to do is I'm going to share this wonderful screen that I have with you. This is called the Gift Grid Workbook. Let me know if you guys can see that. Can you guys see that? Thumbs up, chat. Yes, this is, again, new to Zoom. I want to make sure. Thank you, Brenda. Thank you. So this is one of my favorite things that I did when I started. And the end of the year is a really good time because we just spent a lot of money on Christmas. So this is all the different events throughout the year. I just went to a calendar and wrote it all in. And then across the top, you put the names of people that you spend money on. Put yourself first. And then your, partner, children, moms, dads, aunts, uncles, nephews, nieces, anyone else, best friend. And then we go down the list on the left. And in the cell, we're going to fill in how much we plan on spending throughout the year for that person. Now, New Year's Day, I don't spend money on a person, but I do have a general expense if I go out and spend money on food and drinks with my friends to celebrate New Year's Eve, right? Valentine's Day, spend money. Easter, if you've got kids, and we do Easter dress, Easter basket, Easter food, Easter gets really expensive. And then looking at Mother's Day, cards, gift, flowers. Father's Day, let's face it, dads typically just get a card. Halloween, if you did any costumes for the kids, but we also have this general expense of candy, decorations. So all of these things, there's Christmas, Thanksgiving, that food is way outside the normal budget. Christmas, all the different events. And then we have birthdays, anniversaries, wedding showers, baby showers. And then if you have kids, their birthday parties, cake decorations, goodie bags, food. You take a look over this annual total. When I completed mine, it was $4,800 a year, and I had no idea. This is why I was in debt when I started 13 years ago. So there's a blank one. I can email this to you if you guys want to. It's really an interesting exercise to look into. And what I would do is I would take that $4,800, and I would go back and I would put it into this cash flow workbook. So I'm going to go to the next screen, and let me see if I can get back to this. Okay, so sharing my new screen is going to be the PowerPoint slideshow, PowerPoint. There we go. Sorry about that, guys. This one. Okay, next we're going to go to is an example of how I do auto expenses. So this is tires, auto oil changes, regular maintenance. So you can see these are things that I have. I have a car, I have this expense. So I want to set this money aside and make sure I'm planning ahead for these expenses. The next one we have is home expenses. So these are variable things. I do have to buy a cell phone occasionally. I have to buy a computer occasionally. I have to buy a mattress occasionally. I do buy sheets and blankets, and I do have to replace my glasses and all these different things that we have. If I have anything I need to replace eventually, I want to plan ahead for it. Because again, this is where debt tends to come in. I don't have money to buy my computer when it dies. I go to Best Buy, put it on a credit card. I don't have money to buy a mattress. I go to mattress discounters and put it on a credit card. So these are things that I tend to see end up on credit cards. We want to look at what we've spent and then make sure we're planning ahead for it. When we're talking about the gift expenses, this is some of those things to look at into each of those categories. And what we'll do is I have this wonderful calculator that, again, I can send to you that breaks down and calculates how much money I need to set aside on a monthly basis to include those expenses in my overall plan, because these are things that I'm absolutely going to have to do in my life. I spend this money, and if I don't plan ahead for it, it ends up on that credit card. So there's the household repair, medical, dental, vision, auto repairs, AAA, auto insurance, vacation, clothing, shoes, socks, got to do it. Gifts and holidays, that's really low. Most people are at least $2,000 or $3,000. Fun would be, has anybody gone to any concerts in the past, let's say 5 years, since everything was shut down last year? In the chat, how much did you spend on the last set of tickets? Did anybody go to the San Diego County Fair? If you did, how much did you spend? I want to do those. I want that in my life. I enjoy doing those things, and I'm creating these wonderful memories. The tickets are typically $100. I went to see Blake Shelton, and the tickets were $100. And of course, I had to buy a sweatshirt while I was there, so that was $40. And of course, we had to get some water while we were there. That was another $20. It adds up, but I want to do that. So I'm going to put that in my plan, put it on my fun calculator, and break that down so I can go and do those things throughout the year. Okay, that was all step one. Step two is not going to take as long. So this is the setting SMART goals. This is really sitting down and reflecting, one, on where your money went, what you spent it on. Two, what do you want to do with the money that you earn? What does it mean to be financially successful to you? Where do you see yourself in a year, in 2 years, in 5 years, in 20 years? And this is where we go in, and I want you to set some goals for yourself. And I'm not talking about, oh, I want to be debt free. That's really hard to monitor. Say I want to pay $1,000 in credit card debt in the next 6 months. Specific, measurable, put it in my cash flow. It's attainable. It matters to me because now I'm not throwing all my hard-earned money away, and I have a time frame so I can measure my progress and make sure that I'm achieving that goal. If I want to go on a vacation, it's not I want to take more vacations. It's I want to set aside $3,000 every 12 months so that I can take a vacation to Italy in 2023. Specific, measurable, attainable, relevant, and timely. I'm putting that into my plan because that's something that I want to do. And now I'm going to go look and see, okay, I'm going to put it in my plan. I'm going to say, okay, here's my net income that I get to spend. I have to set money aside for those periodic expenses. I have to set money aside for emergency. I will go over that in a second. I need a plan for my retirement so I'm not working until I'm 100 years old. I want to do my goal. That's really important to me. That's my driving force, is my goal. This is what I want really, really badly. And then I'm going to put monthly fixed, monthly variable, my creditor payments, and the bottom line should be positive. So we have this cash flow example, and this is where we go in. We plug in your income at the top, that net income that I get to spend. We set the money aside. We did that periodic expense calculator, and I know how much I need for those occasional expenses. I'm planning ahead and setting it aside, setting money aside for emergency, retirement, my fixed expenses, my variable expenses, my debt payments. And here we see this bottom is kind of a summary of all of those sections, and I have this positive cash flow. So that's fantastic. If I have a positive cash flow, I'm living within my income and I'm going to be able to achieve those goals. What I tend to find when I meet with people is we're a little negative, and that's where that debt comes in. We live our lives in the monthly expenses, right? The gas, the groceries, the meals out, the rent, and the SDG&E, and the cell phone. So we have all these expenses, and then, oh, I forgot I have to buy tires on my car. I don't have the money for it. It goes on a credit card. So this is where we go in, and this is my favorite part of how we can get out of debt, stay out of debt, and plan ahead for those occasional expenses. One of the coolest things about CalCoach is I can set up all of these different savings accounts and give my money a purpose. So I have my auto savings. It's $1,000 a year. That's $84 a month. I get paid bi-weekly. It's $42 a paycheck. And I have it going automatically into my auto savings. And that gives that money a purpose. That is for my car. And I know I'm going to have to pay for tires. I know I'm going to have, we just paid $300 because we had a flat tire. We had to pay $300 for a tow because we were in the middle of nowhere. And the closest place we could drive, have our car towed to was 50 miles away. So it cost us $300. Now, if I didn't have this auto savings, I'd be in trouble with $300. So those are the what ifs as well, the occasional expenses that pop up that we need to plan ahead for. Vacation savings, gift holidays, I have all of these accounts. And the day after I get paid, there's an automatic transfer that I treat like a bill. That money goes into that account and I live on what's left over because these are expenses that I have. If you've got a pet, you know that you might have a vet bill. We had a $500 vet bill because a thistle got in a dog's ear and it got infected. What happens? How do you pay for that? I have had a lot of medical expenses. So we have this health savings, medical, dental, vision. I know I have to get glasses every 2 years. I buy contacts occasionally. I also slipped and fell while I was hiking and had to get an MRI that was $100 out of my pocket with my insurance. And then I had to have surgery on my shoulder, and I've had to pay $85 a week for my physical therapy. So it's really important to set this money aside for these things just in case they happen, to make sure we have the funds. And then we have the annual fees, Amazon, Costco, AAA, auto insurance, DMV, my, all of the things that I do, I have a set account for that. And that money has a purpose. Okay. So I don't know why. Sorry, it looks like we're on the wrong one still. I'm sorry, guys. Maybe this one. Let's see how that works. Okay, so the first thing we talked about is once we get paid, we set the money aside for our periodic expenses because we know we have to do those. I want to talk about this other part, which is the savings. This is something that most financial gurus are going to tell you that we should do first, is save. You hear that all the time, save and then live on what's left over. Why is this important? Emergency savings, oh my goodness, this last 2 years has been a really, really good example of why we tell you to have 3 to 6 months worth of expenses in an emergency savings. Because if you are not able to work because your company shut down, it's furloughed, they're not able to go into work, are you in immediate financial distress? Are you able to pay your rent? Are you able to buy food? Those are the 2 most important things, that when we talk about basic needs, the roof over your head, food on the table, and the clothes on your back, those are necessities. But emergency savings, if something happens and you don't have the money to pay those the very next month, that's a really scary place to be. So we want to have at least 3 times. You've done your breakdown, you know what you need on a monthly basis. have that money set aside. Just do $50 a paycheck into that emergency savings so that we can protect you in case anything happens. If you have a loss of income, if you fall while you're hiking and have to get shoulder surgery and you're out of work for 3 months and it takes 3 months to get your first disability check, are you okay? So 62% of Americans have less than $1,000 in their savings. 21% don't even have savings at all, okay? So it's really, really important that you set that up to protect yourself from any future loss of income. The retirement savings, I feel, as soon as you can. Now, if you're paying 25.99% on debt, attack that first. Once that's gone, then we can look at the retirement. Because if I'm paying 25.99, I can't invest in anything that's guaranteed that return. If I pay off that credit card, I'm no longer losing 25.99. That's an immediate return guaranteed. So I want to make sure I get rid of that debt first. But retirement savings, the sooner you start, the more you have. I have this great slide that came from Money Talks News. It's a really great article that I get. Carrie invests $5,000 per year, started at age 25. Did that for 10 years and stopped at age 35 and just let it sit. Chris waited. He said, you know what? I'm still strong. I'm going to be able to work for a long time. I'm not going to worry about my investment right now. I'll start at age 35. So 10 years later. And he just kept going, 35 to 65. He just kept doing that 5,000. Now, Carrie, because she started 10 years earlier, is going to get 1.1 million when she retires. Chris, who started 10 years later, but gave 3 times as much for 3 times as long, is only going to get 540,000 because Carrie has that compound interest. Dividends earned on that 5,000 each month, that 5,000 each year get deposited every month. Now she's earning on those dividends and it just keeps growing. Chris waited 10 years and didn't get that 10 years with the compound interest working for him. So the sooner you can get started, I always tell people, as soon as you're working, you're 18 years old. My daughters have this 401k started when they were 18 years old because I don't want them to struggle like I did. I didn't start doing this till I was 30. I'm going to have to work until I retire, but because my girls started early, they might not have to work quite so hard or quite as long. So one thing I've done right. Okay, the last step is to ask yourself the questions once you set up your plan, right? We've got this plan and it's going to help you live within your income. You're planning ahead for those occasional expenses. You're not relying on credit cards. You're putting money into your retirement. You're putting money towards your goals. Something happens and it's going to take you away. So it's my friend's birthday. She wants to go to a spa and it's going to cost $300. That's going to have to come out of my vacation fund because I didn't really plan for a spa day. So I love these questions as I'm going along and things come up that take me away from my plan. For the new year, this is what I want to achieve. This comes up and it's going to take me away from that. So do I want this or do I need this? I mean, obviously going to a spa day is not a need, it's a want. Is it going to help me reach my goal of going to Italy in 3 years? No, if I'm taking $300 out, I mean, that's one full day of a hotel room. If it's not helping me reach my goals, why am I doing it? What is more powerful in that spending that's taking me away from my goals? That's one of my favorite questions, because if I am doing something that is in direct opposition to what I'm saying I want to achieve, there's something more powerful. It might be it's just a habit that I haven't been able to kick. It might be it's just emotional. Someone is my kids are hurting. I need to give them money and it's going to take me away. And my kids are my Achilles heel. I'll give them whatever they want. But if it's not helping me reach my goals, why am I doing it? Really dive deep into the emotional, the psychological, the reason why you're spending this money that's taking away from what you say you want to accomplish. What is it? And then if I don't spend that money, what's the worst thing that's going to happen if I don't go on that spa day? I mean, my friends aren't going to ditch me. I'm still going to have my friends. I might miss a moment, but maybe what else could I do? Maybe I could have a spa day and invite them all over to my place. We'll watch a movie, enjoy ourselves, and do our own spa day. And that's going to only cost me $50. So there's always ways to make it work. And if you look at your cash flow and it's negative, we have to figure out a way to either A, increase income, or B, decrease expenses. Because with a negative cash flow, with everything plugged in, the only way to cover a negative cash flow, which means you're spending more than you're earning, is to put money on your credit cards or pull money out of your savings until that's gone, right? So we have to look at that bottom line. The bottom line is what's going to drive this, as well as your goals. Really always think about those goals. Have that be that driving force. Is this spending helping me achieve my goal? If it's not, why am I doing it? And what can I do differently to make this happen? So we just had a member who has a housekeeper coming every single week, and it was $600. So what can she do differently? Let's go every 2 weeks and cut that bill in half. That's going to give her more money to achieve her goals. She's still getting a housekeeper, right? Because I'm totally with her on that one. I'm done. I don't want to clean anymore for the rest of my life. But it does impact the bottom line quite a bit. So there are always ways to achieve your goals. You just really have to look at the bottom line, look at where the money is going. You've all set it up now, so you know what you're spending. And I have a way of reducing expenses in every single category you can imagine. So if you have questions about this, if you want some help and you want to look at your plan and you want to look at your expenses and you want to come up with some ideas of opening that cash flow so you can achieve your goals faster, this is a free service that CalCoast offers. So we've got my phone number on there, as well as Jevin Boyer. He's the other financial fitness coach here at CalCoast. Put our phone number on your speed dial. If you've got questions regarding debt, questions regarding about credit, questions regarding your plan for the new year, we can help set up a plan for you if you're a member of California Coast Credit Union. So on here, you're going to see that Enrich that Josh was talking about initially. This is calcocu.enrich.org. It's a free resource. Tons of articles, tons of videos, tons of information that can help you. Same thing if you don't want to reach out to me or Jevin, lots of ideas about how to reduce those expenses in each of those categories that you're spending money on so that we can help you live within the income that you have. Okay, so any questions on anything that we've talked about today? You can unmute, you can chat.
You can raise your hand and I can allow you to be able to unmute yourself as well if you'd like to ask any questions.
Can we get a copy of the PowerPoint and spreadsheets? Yes. So if you, let me go back to that screen. If you get my email address or Jevin's, just email us and I'm happy to share that with you. Happy to give you a lot of extra handouts too on ways to reduce expenses. So I can give you the PowerPoint, the handouts that we talked about, the gift grid, the cash flow worksheet, the periodic expense calculator. I have Excel workbooks of all those where it does all the math for you. They're very helpful. And then a really great handout on ways to reduce expenses. So you can look at where your money is going and come up with some ideas. And, you know, maybe one of those will help you reduce your setting gas and electric, you know, go from 150 down to 50. That's by implementing all the tips and tools in there, it saved me $100 a month. So look at everywhere that money is going, look at your cell phone bill, dive deep in there. You know, what are you spending? I had a guy who was spending an extra $40 on a hotspot he hadn't had in 40 years. So look at everything. And this is a great time to do it. End of year, fresh start for the new year, create that plan that works for you.
All right, well, looks like we don't have any questions.
Covered everything. I like this.
Well, thank you very much, everyone, for joining us today. If you do think of anything you'd like to discuss, you can contact Taralyn and Jevin anytime. Working with them is free as a part of being a member of California Coast, and also a free service that we offer for city employees. So contact either one of them directly. You can always also go to our website, to one of our branches. You can call, whatever works best for you. And again, please be sure to take the time to fill out the survey, and then we will pick a winner in the next day or two on that for the Amazon gift cards. So with that, just want to thank Taralyn for presenting today. And this is our last webinar for the year. So we will see you next year. We're in the process of putting together the schedule for next year. So keep an eye out for the emails to hit your inbox. And we will see you in the new year. Happy holidays and Happy New Year to everyone.
Happy New Year. Here's to a fresh financial 2022. Bye, everybody.
Take care, everyone.